All right, you should see me now. I'm so sorry, Claire. I feel like I've turned you into the YouTube police. Thank you. Once again, 2 days in a row. I promise I'm going to get my poop in a group. I'm going to get a giant note on a piece of paper in front of me here that just says YouTube. Because I'm missing one little piece every now and then. I get so excited to start the class that I forget to bounce back and forth between all the different cameras I need to turn on. All right. Thank you for that very much. So does that help out a little bit? What about only on the 5-1 we're looking for these three divergences. Any other time, we're going to let price reach an area, and then we're just going to gauge where our trigger lines are. You can see price comes down to support. None of these T3 trigger lines have been able to make it through support. Therefore, support is likely to hold. We also have, on the 13.2 happening right now, when price accelerates away from these large triggers, see how my large triggers are on the other side of this reversal bar? More often than not, guys, price is going to snap back and close that gap. And this is what we call the gap theory. And I'm going to take a picture of it for you. Maybe do a little annotation on a chart. Guys, we're going to take a lot of pictures today. This is your gap theory right here. Price accelerates more than a full bar away from large triggers will most likely snap back. And guys, I never speak in absolutes. I never say it will definitely without question snap back, because I don't control the market and I certainly can't see the future. But what we're recognizing right now live in the market is a simple little pattern that can keep you from trying that short trade, keep you from trading into an area likely to stop the market, and therefore keeping you from trading into an area where you no longer have a clear path. And you can see that we got a tick away from those large triggers. But let's talk about termination conditions. Let's just scroll back on a 13.2. And guys, I like it when you give me a Y in the room if you're with me. In order to identify a termination condition, an area likely to stop the market, your price bars are going to reach maybe Fibonacci resistance, Fibonacci support. It can be these yellow 1-to-1s. Guys, it can be a magenta divergence high line. It can also be a cyan divergence low line. But the recipe, price reaches an area, none of my trigger lines break through the area, I'm staring right into a termination condition. We see it right now, price reaches an area, absolutely no trigger lines break through, we're in a termination condition. Our job as people that are requiring a clear path is to let those trigger lines get to the other side of support or resistance. And I'll show you exactly what it looks like when an area breaks. When price reaches this area of support, and both the small and large triggers get to the other side of this blue line, this blue line is broken. We now have an area of support behaving as an area of resistance. And you'll see sometimes there'll be multiple areas. The recipe is always both trigger lines get to the other side of resistance, and this is when we consider an area broken. This area has been broken, but as price reaches this area of resistance, we have to wait for the exact same thing to happen. Are you guys with me on this for termination conditions? No triggers through the area. We no longer have a clear path. We're right into a termination condition, an area that may reverse the market. When both sets of trigger lines break through an area, well, then we have an area that's considered broken. Resistance begins to act as support. Support begins to act as resistance. And guys, there's one other areas with the potential to break that we're going to talk about. One is very clear. Trigger lines through, the area is broken. Trigger line's not through. The area is not broken. We also have areas with the potential to break, and this happens when my small triggers break through an area of support. But does everybody see how the large triggers haven't followed yet? This is what we call a 50-50 look. And guys, this is not an indication of your odds of success. This isn't a reference to whether or not you're going to win. It's not a maybe. What it simply means is that half of your trigger lines have made it through an area and half of your trigger lines have not. So when you have a 50-50, you must have strong triggers, and we're going to go through and look at exactly what those look like. And then the area has potential to break. And this is the key right here, guys. But it has not broken yet. So this is your race car flying at a brick wall at 100 miles an hour. There's a chance it's going to smash right through it. But until it does, until those triggers get to the other side, we don't consider that area broken. So on your 13-2, those are your three options. 100% clear path, absolutely nowhere to go because you're into a termination condition, and then we have an area with the potential to break. And now we're going to come back. So far that termination condition's holding true, isn't it? Price has reached that area of support. We're still trying. Will you consider that both triggers also cross the fib? To recognize an area that's broken, both lines, Sam, great question. Both lines need to make their way through. See how those smalls are straddling right now? One line is through, but one line isn't. I would say my small triggers are not through that area yet. And remember, guys, all we're doing is talking about patterns. All we're doing is talking about the looks that repeat themselves over and over again. Excuse me, just one second. Absolutely. So we talk about areas break with strong triggers. What's a strong trigger line? Guys, we're just going to use the live market for examples all day long. In an uptrend, a strong trigger line means, let's do this. We promised ourselves to keep it simple, right? Let's keep it simple. Let's get rid of everything except these trigger lines. In a downtrend, small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Guys, I want everyone to take note of this space between the small and the large. Guys, this is your best of the best look. This is a look that we identify as strong triggers. This is a look that says that the market is likely to continue in the direction of the trend. Coming through the same direction. Large, smalls break above, the space is created, the large triggers are wide. This separation, this space between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. Guys, this is your strongest, your best. This is rule number one for a high probability trend trade on the 13-2. This strong trigger look gives you the advantage of momentum. And remember, if we go to the picture, rule number one, large chart needs strong trigger lines. So do me a favor, give me a Y in the room if you're comfortable with this look. Pretty easy to identify, right? Especially when we pull off those areas. So what happens if this is a strong trigger look, those small triggers return, they work their way inside. We're going to call this a weak trigger look. We're going to say that rather than the odds being favorable for the market to continue in the direction of the trend, this weak trigger look says anything can happen up or down. And guys, you'll notice that this appears to be a reversal point. As those small triggers return, we lose momentum. You can see that there was a push up. Same thing at the top. You have the ability to gauge the momentum of the market with only 4 little lines on your chart. Things slow down and the market pushes down. Even though they try to push back up, look at how the trigger lines go from odds favorable to the wrong side, and sure enough, it starts that push down. So rule number one, strong trigger lines is going to give you an advantage of momentum. And then when you couple that strong momentum and you're not trading into one of those termination conditions, remember, rule number two on the 13.2 says no termination conditions, room to the profit targets. You can start seeing how we piece together this recipe for a high probability trend trade on only one chart initially. And guys, so far we've identified momentum, nothing in the way. I want you to get in the habit of being able to go back and circle these little tails that you see anytime there's odds favorable momentum. Anytime the smalls break above the large or the smalls break below the large, these tails, or wicks as some people call them, guys, these are potential entries on the 5-1. And we're going to go back and we're going to take a look and see how these line up. And this is all crude oil. This is live today, guys. This isn't me scrolling back and handpicking anything. This is literally today's market, today's momentum. And now I'm about to, with a simple right click, load my template. And now we're going to put areas on there. We've established momentum. We're going to let that chart come together. We're going to determine whether or not we're trading into termination conditions using that simple recipe. We are going to look and make sure when we have that odds favorable momentum, have the small trigger lines broken through the area? Are the large triggers coming up with strength? Guys, right here, we're trading into one of those pivot stop outs, one of those divergence highs, potential pivot stop out. Rule number two says that I no longer have a clear path. I don't have that advantage of a market that has absolutely nothing in the way, which really means that I have to get rid of that circle. I'm not going to look for an entry on my smaller, faster chart. Large triggers breaking through areas, odds favorable. Guys, for the sake of lessons, we may fudge the look a little bit, but do you see how price reaches support? My trigger lines haven't broken through. This is an area that may reverse the market. With this much momentum, they got a little further push, but this line with no trigger lines through it takes away my advantage of a clear path. And of course, when you're learning, you're going to want to trade into these and you're going to say, well, maybe it'll break. And we don't want to trade on maybes, guys. Notice how odds favorable momentum has the most potential to break an area. And then we get into these areas, we begin to lose momentum, creates a reversal. And once again, we've reached support with no trigger lines through. We're not taking that opportunity. Guys, this is a study tool that's going to teach you patience. This is a study tool that's going to have you on the side of the best and really focusing your attention and your ability to recognize through repetition. Guys, termination condition, large triggers a full bar away. Give me a Y in the room if you see it. When those large triggers remain a full bar away, price tends to snap back, and that's exactly what happened there. How amazing is that to keep you out of a potential short trade, even if your smaller chart looks perfect? Guys, I love this pattern. What does this mean for us? If I can't go long into resistance because I don't have trigger lines through, and I can't go short into support, guys, you just had your largest realization for day trading. And the reality is, let me get to our trading rules. 90% of what we do during the day, guys, 90% is going to be dedicated to chart reading, to taking that information and understanding three essential elements. We're going to be able to identify through our chart reading where the market is likely to continue. You're going to use those continuation points for entries for the high probability trend trade when your rules are met. You're going to be able to understand where the market is likely to go. You'll use momentum and Fibonacci to make great decisions about profit targets. And you'll be able to understand where the market is likely to stop using that simple two-part recipe for identifying a termination condition. You're going to use these three key elements to take what we call a high probability trend trade. And a high probability trade means, I'm telling you guys, there's nothing that you can't find on this website. A high probability trend trade means that each indicator on every chart agrees for a trade. It means that you have the strongest triggers. It means that you have a clear path. And it means that you've taken an entry where the market is likely to continue and there's nothing between your entry and your target, guys. If you will do me a favor, I want you to raise your right hand. Not really. But if you'll take 30 days as a brand new user, if you'll take 30 days as an old user, not old in age, but someone that maybe is coming back looking for that consistency, if you'll take 30 days, 20 trading days, and focus on this highest probability trend trade with the strongest triggers, with nothing in the way, it's going to teach you to read your charts. It's going to give you the skill set that you need to not only find that high probability trend trade, that trade that typically wins 70 to 80% of the time, but it's going to open up doors for you. It's going to put you in a position where you can locate and execute a medium probability trade when most of your indicators line up for a trade, but a small issue exists. Your ability to read your charts is going to help you identify that small issue. And guys, truth be told, this is going to be the majority of your trades. There are perfect trades that set up, but there's so many where there's only one little issue existing. It would be a shame not to take opportunities to grab that money. But when you're executing medium probability trades, you're going to take them and manage assertively. Your ability to read your indicators is going to help you manage assertively. You're going to be able to identify trouble through chart reading, maybe take a portion of your profits off, and get to a zero loss level. So give me a Y if you're with me on this one, please. First 30 days, let's learn to read our indicators. Let's learn to read our charts. Let's learn to recognize advantages. Gonna walk before we run, guys, right? And you're gonna be amazed at how well you're gonna be able to create expectations based on patterns. And then we're gonna take that amazing knowledge and we're gonna branch out to medium probability trades. We're identifying termination conditions, and we know that our rules provide advantages, so now it's time to sit on our hands and wait for a second. Your S&P is coming from a termination condition, right? There's an area of resistance. Beautiful. Termination condition. It has odds favorable momentum. Smalls below the large are wide. They're angled in the direction of the trend. And guys, what do we recognize on our S&P? Our trigger lines are straddling an area, right? My small have broken through with odds favorable momentum, but my large haven't made it yet. We can identify this as a 50-50 look, and it's only a reference to where the trigger lines are. Half of them are through, half of them are not. 41.53.22 has the potential to break, but guys, this area hasn't broken yet. Right? So not high probability. We don't have the advantage of a clear path. So if we're going to look for a trade to go short, we want a beautiful entry on the 5-1. We want that 5-1 to tell us that we have every advantage. I want all of my triggers down. I want my areas down. I want the absolute best of the best look on my 5-1, which is going to be my segue. How do we identify that area where the market is likely to continue? Everybody remembers that we went through, right, on our larger chart. Let's do it again. When we have odds favorable and no termination conditions, we're going to circle the tail. We're going to identify the best of the best. Let's see if it's happened on the S&P today. Maybe not. Maybe it did. There's one right at 3:30 a.m. for you early risers. Smalls below the large have not reached an area. Give me a Y in the room if you recognize rules 1 and 2 have been met on my 13-2 chart. I have momentum that suggests I'm going to reach the next area, and I have nothing in the way, no speed bumps, no brick walls, no areas of support. Guys, this is how it all begins. That's the best of the best look, setting you up to begin to identify your entry. And we're going to talk about entries real quick, and then we're just going to go live market all day, guys. When the rules are met on the 13-2, when you have odds favorable momentum, when there's absolutely nothing in the way, guys, this is what your 5-1 is going to look like. If we're in an uptrend, all your bars are going up. All your triggers are going up. Your mid-band's green because price is above it. Support is blue. We're going to focus our attention on the 5-1 large triggers. We're going to make sure that they're up and strong. You're going to make sure and look and see what areas are going to fall inside of those trigger lines. Remember, rule number 3 says that we're going to use a limit order at an area inside of favorable large triggers, and this one's consolidated just a little bit. And the part that picture doesn't tell you is we're going to buy or sell a pullback. And what does that mean? That means that while everything is screaming up, we want that market to come down. Remember, the large crowd says everything is going up. The large crowd says that we have momentum. The large crowd says there's a freight train of momentum and nothing in the way. So now we want this smaller group of people with a different opinion to push it down just far enough so we can get an entry and take their money. And that starts with a reversal bar on the 5-1. That starts with a down bar after all of these up bars. And now it's time for you to create your window of opportunity, to identify, to pinpoint that area where the market is likely to continue. It goes from your highest point of support to your lowest point of support inside of favorable large triggers. We're going to use that limit order right at the top of the window, and you're going to patiently wait. And either that market comes back or it doesn't. You don't control that. Either your order is filled or it isn't. But if your order is filled at the top of that window right here at 79.21, what are the advantages that you have going into this trade? You have the advantage of momentum. You have the advantage of a clear path. And guys, you have pinpointed with absolute accuracy that area where the market is most likely to continue. Your initial protective stop will go below that window of opportunity, down where the market shouldn't go. And guys, I will take this trade 1,000 out of 1,000 times. This is the core of my trading plan, because this is a trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that typically reaches targets. This is a trade that allows us to reduce risk because we wait for the pullback and maximize our profit potential because we let that little small group push us right back to the best of the best spot. So your job as a brand new user, whoa, where'd my picture go? Is to scroll back, to develop trust, right? That belief in the strength, that belief in the power. When the rules are met on your 13-2, when there is momentum, when there's nothing in the way, guys, circle every tail you see. And if that tail lines up with an area of support or resistance inside of favorable large triggers, congratulations, you've just identified a high probability trend trade. And your absolute perfect entry has strong triggers, even on the 5-1. It has no divergence, no loss of momentum, even on the 5-1. And that window of opportunity, the more these areas stack one on top of the other inside of favorable large triggers, the more concise that area where the market is likely to continue is established. So now let's go back and let's take a look. Small's below the large, larger wide, angled in the direction of the trend. Sam, absolutely not. And that's a great question too. I love that you asked it. Remember that the 13.2 leads the way. Remember that it's that 13.2 momentum that we're banking on. It's that 13.2 no termination conditions that we're banking on. In order for this price to get back to this area, more often than not, it's going to turn against you a little bit. But look at the trigger line locations. Remember that odds favorable momentum? We still have odds favorable momentum even with that little turn on the 5-1. So don't let this little turn in price or this little turn in trigger keep you out of a trade. Does that make sense? Remember, this is a smaller, faster chart. Everything that happens in this one bar, this is the top of the bar, and this is the bottom of the bar. And you can see all of this price that happens within. So great question. If these are outside of my large trigger, Sam, it's 100% go for me. Sometimes your rules aren't met. Awesome. Small's below the large, large are wide, angled in the direction of the trend. This is an area with the potential to break, but hasn't broken yet. And guys, as it comes through, you'll notice that one set of trigger lines is up, one set of trigger lines is down. I don't have one of those areas inside of those favorable large triggers angled in the direction of the trade. But as I pull back just a little bit, if I circle this tail, you'll notice that the first pullback with strong triggers is right to the area. The second pullback is right to an area. The third pullback is right to an area. And Sam, take a look. Those small triggers remain outside for the whole time. And then look what happens when we get more of those divergences, when the small triggers change direction. We fall into this indecision, and it's no longer the best of the best. So we're going to wait and commit for the best of the best. Let's go back to 330. There's another one of our circles. And that one didn't quite make the areas, did it? Didn't quite make it to that area of resistance inside of favorable large triggers. Guys, we're going to go through and we're going to hit an entry together. And when we do that, I'm going to need some participation from you guys. I think the market got a little shook up from that State of the Union yesterday. I have no idea what he said, but a lot of bouncing, a lot of fighting in the markets today. All right. Are you guys ready to do some smart stuff? All right, this is for my new users. Let's take all the confusion off of this for you and just go triggers only. Are you guys ready to identify an entry to be able to pinpoint with accuracy where that market is likely to continue? Let's see if this formula works. So new users. Let me scroll up. Let me see. Where are my new users? Sam user? Rob A, I know you're on this, Rob. Zeba. Who else do I have in here? Hold on. Let me scroll. I'm looking. Wadapov. Gosh, I hope I'm saying that right. The first rule on the 13.2 chart. Small triggers below the large triggers. Large triggers are wide, angled in the direction of the trend. I need a Y in the room from you if you recognize that we have odds favorable momentum. Rule number 1 has been met. Pretty easy to identify, isn't it? Rule number 2 says that you have to have a clear path. Do I have a blue line, 1-to-1s, divergence low? Is there anything in between me and what would probably be a potential target down here? Have we reached an area? No. So rule number 2 is met, Zeba? Sam, rule number 2 is met, right? Haven't reached an area? Cool. You guys are so good at this. Okay, we're going to go to the 5-1 chart and we're going to find an entry. My 5-1 chart is working its way down, right? Everything is starting to go down. What do I need to see on that 5-1 chart so that I can identify my window of opportunity? It's going down without me. The market's going down and I can't control it. Do you guys remember, what are we looking for on a 5-1 chart to help us identify that best of the best entry? We're going to wait for a reversal bar. Absolutely, Sam. And it starts with a reversal bar. It starts, I'm waiting for a bar that's going up after all of these bars are going down. Keeps coming, keeps coming. There it is. So now I have a reversal bar. The small group is ready to take on the large group. Guys, the small group rarely wins. So let's identify our window of opportunity. First of all, where are the bottom of my triggers, guys? They actually go from here all the way up to here. The trigger lines are split a little bit. And my areas of resistance, my window of opportunity, is going to be from the lowest point to the highest point inside of those trigger lines. And this isn't the best example, and I apologize for that. So we're going to place a limit order just below that window of resistance, just below that lowest point of resistance, right at the bottom of the window. Is everybody with me? Reversal bar, window of opportunity, limit order waiting for the market to come back to us to get that entry. The market comes up and it runs smack dab into an entry. And now we're in the market at 77.51 with the advantage of momentum, the advantage of no termination conditions, and the advantage of being patient enough to wait for the best of the best entry. The market pulls up a little bit and then gives us a reversal bar in the direction of the trade. My initial stop was kind of up here where the market wouldn't go, right? Because of the advantages, I'm okay putting a little money at risk. Once that reversal bar hits, though, I'm a couple ticks above it, and I've reduced my risk because I waited for the retracement. And if I'm in at 51, there's a very simple plan that says, and I'm going to share this with you guys, we're going to talk about it. New users can take profits at 100, and if the market comes down and hits that first profit target, their stop goes to break even. There's $100 in the bank and absolutely nothing to lose. And guys, I'm telling you, it feels good when you have no risk on a trade. And then a very conservative approach would simply be to look for our second profit at $200, or we get stopped out. This would have been a $100 trade. The advantages were in place. Notice that we're starting to get losses of momentum. Notice that those divergences begin to play in, allowing us to recognize change on the smaller chart to help us manage a trade and not lose money. So guys, that is how you identify an entry. We're going to look for better opportunities as the day presents itself. The morning pre-market has actually been a little bit slow today, but that's okay. Where we lack in pre-market, we have plenty of pictures, plenty of information. What do we recognize at the top? Price reached an area of resistance. Absolutely no trigger lines broke through. Give me a Y in the room, guys. Termination condition up top, right? No reason to look for a long trade because we had given up the advantage of a clear path. Well, now this termination condition is creating a full reversal of the market, meaning these large triggers went from green to red, and now we're getting odds favorable momentum coming from a termination condition. Guys, if you go back to that commitment, that first 30 days, focusing on 5-1 trend trades that happen after a termination condition on the 13-2, that's your best chance of success. Small trigger lines are beginning to break through the areas. We have odds favorable momentum. Does everybody see it? Can we identify in a blink of an eye? This is how quick it happens. Smalls below the large are wide, they're angled in the direction of the trend. Look at this checklist. Guys, this is a checklist for your highest probability trend trade. This is a checklist for you to follow to make sure that you know exactly what you're looking at. This is a checklist to help you police yourself that you're following these simple 3 rules. And guys, this is a checklist that I just posted in the room, if I can find my mouse, that'll help you police yourself. Is the market coming from a good top or bottom, a termination condition that creates a full reversal? Absolutely it is. And guys, this isn't mandatory, but increases the likelihood of success. Do I have odds favorable momentum? Yes. Sam, there are multiple fib lines close by on the 13 too. So Sam, 2 types of trades. And we'll get rid of this one. There is a trade, a highest probability trade, where every trigger line smashes through these areas and the area is considered to be cleared, both small and larger through. The second trade is what we call that 50-50 trade, Sam, and that's when your small triggers break through the areas with odds favorable momentum, but the large triggers haven't yet followed. So what we're looking at are areas with the potential to break, but they haven't been broken yet. And this is a medium probability trade, no longer a high probability trade. But remember we said, when an area has the potential to break on that 50-50, if my conditions are perfect on the 5-1, I'm willing to take a shot at this one, especially coming from a good top. I have a small window of opportunity right inside of favorable large triggers. I have strong large triggers on my 5-1, right? No divergence. If I were going to risk my money on a 50-50 scenario, this one has so many advantages that I would have been short right around 78.13. My initial stop would have been where the market isn't likely to go. And let's look at my advantages, because guys, remember, medium probability, lower win percentage, but I have the advantage of a termination condition that creates a full reversal. I have the advantage of odds favorable momentum. I have the advantage of every trigger line down, every area down. I have the advantage of a tiny window of opportunity, the advantage of strong triggers. Guys, I have 100% agreement on both charts. And at this point, my small issue is that the areas have the potential to break but haven't yet broken. So if I'm in at 13, my first profit target was reached on a 50-50 trade. And if I'm in at break even, guys, I'm still in this trade. First profit target reached, break even at 13. It didn't hit me. Let's see if I get to 93, because 93 is my $200 target, isn't it? Are you guys with me on this? This is happening live in front of you. My entry, right? My first profit target reached. I'm at break even. My second profit target at 93. Guys, I like your odds of winning this one. What do you think? I have odds favorable momentum. I have no termination conditions. And congratulations, ladies and gentlemen. You just won $300 simulated dollars on the perfect medium probability trade. Now here's the best part. Is anybody else excited about learning this setup? Does anybody else want to commit a little bit of study and be able to do this for yourself day in and day out? Because that's what the class is all about, guys. This is what we look at each and every day. Elvis says, funny that I said 13. I want to see what you saw, Elvis. Elvis is looking at crude oil. Termination condition. I love Elvis's charts. So guys, Elvis does stuff on a higher time frame level. Elvis studied his conditions, he studied his charts, he recognized his termination conditions. He had odds favorable momentum. He knew where the market was likely to continue. He knew where the market was likely to stop. All based on reading. You have to learn odds favorable first? No problem. Are you ready, Ziba? Let me get these indicators off of here. Guys, it's okay if you look at this and you're like, I don't get it, Mark. My job is to make sure that you do, and I'm committed to making sure that you do. Are you ready? So from the tutorial section, everything that I talk about, and guys, I can't stress this enough. Everything that I talk about can be found right here. So let's go to trend and momentum defined by the trigger lines. Rule number 1, Ziba. And I'm just going to put this picture right in the room for you as well. But this is nothing but trigger lines in an uptrend. So let's start there, right? Let's start at the absolute most basic. Ziba, if the background on your 13.2 is green, we're in an uptrend, and you're only looking for rules to be met for high probability trend trades long. Pretty simple, right? If it's red, we're in a downtrend, and you're only looking for rules to be met for high probability trend trade short. I'm going to put those two charts in there for you. So in an uptrend with a green background, here's the odds favorable momentum and where that phrase comes from. When the small triggers are up and above the large triggers, when they've accelerated away and created this space. The large triggers are widening, the small triggers are above, odds favorable for the market to continue up. That's where I coined this phrase from. So odds favorable momentum is synonymous with that strong trigger look. In a downtrend, when your background is red, the small trigger lines break below the large trigger lines, that space created, the odds are favorable for the market to continue down. If you're a big fan of language, I was an English lit major, odds favorable gives me warm fuzzies. It makes me feel good about my chances for success. And then the other side of the coin, when those small triggers work their way back to and inside of the large trigger lines, we call this a weakening of the triggers. And you can see that it says anything can happen up or down. So Sibo, when we talk about momentum, you're either going to have odds favorable momentum, you can type OFM on your chart, or you're going to have anything can happen, right? Jam says odds favorable momentum equals the likelihood of collecting other people's money. So Ziva, how are we going to study to get you totally comfortable with odds favorable momentum? When you have software, hopefully you have it up to date. If not, that's okay. Guys, when you right click on your 13.2 and click and hit load on templates, this is your best study tool. I want you to load the two triggers only. And guys, do this after class today. And click OK. And it's going to take care of all that noise. Does anybody recognize this odds favorable momentum with a tail is the trade that we just talked through in class? The rules met. And look at what the market's doing. All of that momentum, and it continues to go down. Very, very important key. So if you go through and you just start looking, absolutely, Ziba, each and every class, thanks to Claire reminding me, if you go to the Nexgen page, it's being broadcast live right now if you ever come into class and it's at capacity. But then if you go to live, here's the link to it if you want to save it. You got a couple months worth of classes. And then I also, if you go back about 2 weeks, the first hour of most of these classes is a very dedicated 101 review, going through the odds favorable momentum going through the termination conditions and covering entries. And that's probably somewhere, go back to November, probably December, and go through and you'll get that really, really clear defined. I'll look and I'll try and find a link to one of those videos, and I think John's going to edit one out so that we have a 101 class, like a 1 hour 101 class for you guys that are new. I used to teach it every day at 2 p.m., but then I took over this class so John could be a professional trader. But do you see how we do this, Zeba? Small's below the large are wide. Circle a tail. Small above, circle a tail. This is your first drill. And look, this is one day. It happens there. I've got a little tail there. There's another tail there. We've got a tail here. So, oh my gosh, visit it every day. Look at these tails. Look how often this happens. It takes a little bit of patience, doesn't it? But how many of these tails continue in the direction of the trend with that odds favorable momentum? Guys, you're developing trust. I'm going back. I'm back 2 days now. And I'm still scrolling. And it's still happening. 3 days back. 4 days back. You'll be recognizing odds favorable momentum in absolutely no time. And then you just put those indicators back on. And you look at those tails that you circled. And Zeba and Sam and everyone else in this room, do you see how on this bar, price reached resistance, but no trigger lines went through? Make it a little bigger. Remember, this is historical, right? But price reached resistance and the small triggers hadn't broken through yet on this bar. We're not willing to forfeit the advantage of a clear path as a brand new user because we want to keep ourselves on the right side of things as often as we can. Price accelerates away. It begins to return. We can see the beginning of a loss of momentum. And guys, look at this. 1 loss of momentum, 2 losses of momentum, and the small triggers have gone to anything can happen rather than odds favorable. We're beginning to give away the advantage of momentum. Give me a Y in the room, live in the market right now. We're losing momentum. It doesn't mean that it can't be a great trade, but it means that as a high probability trend trader, you no longer have the best of the best look. Pretty cool, right? We're going to do this all day, every day, guys, until you get where you want to be. Termination condition. 3 divergences in the same location as the termination condition. Guys, everything says this market is likely to push up. Now I get a full reversal. I have odds favorable momentum. My triggers are rolling. And I can identify where the market's likely to go by using Fibonacci and momentum indicators. Pretty cool. I'm going to leave you with the S&P for a minute, guys. I'm going to go refill my water. Great first hour. I want you to take a second and just ask yourself, hey, am I really clear on this? Is there something that I want to see a little more of? And let me know what you want to discuss. But the second half of this classroom, guys, and where you get the absolute most out of this Nexgen education room is when you post charts, is when you let me know what you see, when you let me know what you think. And this is outlined right here. The path to becoming a confident trader, ASAP. Guys, 1 million people avoid the path. The ones that stick to it get where they want to be the fastest. Post your trades in class, post your pictures in class, post your questions in class. Raise your hand as many times as you can. And then the second half is going to be tracking your performance, tracking your trades real time in your performance spreadsheet. And we'll go over that spreadsheet when I get back. But we're going to take a little time. We're going to keep watching the live market. Price reaches 1-to-1s. Absolutely no trigger lines break through. Not looking for that long trade, are we? Isn't that amazing? Once again, rule number 2 keeps money in your pocket. Guys, I will be back in just a couple minutes, and we'll just keep going. I'm going to review charts when we get back, and we're going to stick with the live market, and then we're going to get into writing a plan and being able to take pictures and use that spreadsheet. So do me a favor, if you're brand new, I want you to pull up your TechSmith capture software, okay? I want you to get that software up, and I want you staring at that big red button, because we're going to take a picture together, we're going to annotate a chart together, and we're going to post that chart in the room together. And I want to see all my new people posting pictures. And new people, if you can't post a picture yet, I want you to have the courage to say, hey, Mark, I can't do it yet. Help me out. Because that's what I'm here for, guys. I'll be back in just a minute. Let me make sure everything's muted. About this to stay on break very long. Termination condition, right? Right up to a termination condition, right back to a termination condition. Oh my gosh, does anybody remember that 90% of what we do is waiting for advantages? Waiting for odds favorable momentum, identifying areas that have broken or have the potential to break, circling tails. Everybody's good with that so far, right? What did it look like? Let's scroll back. What does that look like? Oh my goodness gracious, guys. No divergence, strong triggers, tiny window of opportunity. Now, when I scroll through charts, when I look at pictures in this room, I better see a couple of these from my experienced people, right? You guys that are still kind of brand new, let's take a picture and let's walk through it. And this is exactly, oh, you know what? Let me cancel that out because I said we're going to take a picture together. This lends itself. Okay, everybody take your capture software. And we're going to do something here. If I click this big red capture button, if I hover over one chart, it's only going to take a picture of one chart. But remember, we're 2 chart traders, right? So I'm going to left click in the upper left-hand corner and I'm going to drag it all the way down to the right. I want to make sure that I get my prices in there because it's important to see that. I want to get my timestamps in there too to make sure that I'm looking at the same information on both charts. And I'm going to release that mouse. Release the mouse. And it's going to give me some options. I'm going to click on this big camera that says capture an image. And up comes my image preview. Your Ninja is not coming up. Is it your chart, Sam? Or the actual NinjaTrader itself is not coming up? Not getting your control station. And I'm going to show you Ninja itself is not coming up today. Sam, do you want the clearest path to success? Click on tech support and let Jason take 2 seconds, and more than likely he'll have you fixed in a matter of minutes tops. The only stuff that Jason can't fix are things that aren't broken. He's amazing. He knows the software intimately. And guys, this is for everybody, especially you new people. Don't suffer. Don't sit there and get frustrated. Don't sit there and be like, oh, this is the worst. I can't stand it. Go to Jason. Go to tech. Let him fix it for you. He does an amazing job. And guys, true story, he's a super nice guy. That's what I do. If my stuff isn't working, I go to Jason because Jason knows so much more than I do. All right, so we have our capture image preview up. You guys all have it? You took a picture? It doesn't have to be the charts, but it can be. So let's go through. There's a couple different things. There's an arrow function, and you can change the color of it if you want. Maybe you want it to be gold. And we will put a gold arrow just kind of pointing at the trigger lines. And then there's the shape function. Maybe you want it to be white. We'll take that shape function and maybe we'll put it around our entry. So what you're doing now is you're giving me a little bit of information to let me know why you did what you did, but you're going to use this call out button. And you're going to write strong triggers, right? Because that's rule number 1. And then down here, you're going to identify 50-50. Smalls through, potential to break. You might even put a note on there that says, let the 5-1 entry be perfect. Or the Levi's 501 entry. And then over here, you're putting entry at midband, at large triggers, no divergence, strong triggers, perfect entry for 50-50 trade. You guys with me so far? Pretty easy. But what am I doing? I'm reinforcing my understanding of the rules. And more than that, you're telling me that you understand the rules. And then guys, you're going to type on this chart the happiest noise in all of day trading. You're going to put your caps lock on and you're going to type, oh, not bongo. I have to look at my fingers. There we go. Bingo. Maybe some exclamation points. Because when a profit target is reached, guys, we say bingo. Once you have all of this done, there's two ways to get it in the room. I can click copy, and by clicking copy, it's going to put it onto my clipboard. And let me slide this over so you guys can see it. If you're using the pop-out version of the room, sometimes it's hard to slide it over there. Let's just do this then. Don't worry, guys, I'm coming back. I'm just going to put a different screen on there. Never mind, I'm not. I'm messing stuff up here. I apologize. There we go. Now you guys should be able to see what I'm doing here. Whoops. I'm going to come right down into the chat box. Control V if it's the pop-up. And I'm going to put it right in there. Let's turn that off. That's a little crazy, isn't it? And let's get back to the correct screen. And then the second thing that I can do is I can click this blue upload button. And when I click the blue upload button, it's going to give me one of those screencast links that you guys see all the time in the room. I'm just going to copy it. Once again, it's going to put it onto my clipboard. I'm going to come to the education room and I'm going to post it into the room. And I'm going to wait for the feedback. And then I'm just going to hit close and I'm all good. If you have capture software, you can't go back and really annotate it. But what it will do is every time you upload to Screencast and you go to your Screencast account, it's going to put it into this little digital library for you so you can come back and study it. And then the second half is go into your spreadsheet, guys. This spreadsheet is provided by Nexgen. If you're brand new, and you go to the tutorial section. If you're brand new, it's in your study picks folder. If you don't have this one, there's a link right here in tutorial, and you can follow that link, and it's going to bring you to the spreadsheet, and you can download it, put it on your computer. But your first page is where you track everything you do. Your first tab is going to be where every time you take a trade, you put it in there. You're going to copy paste it right in. You're going to tell yourself how you felt, whether or not your rules were met, maybe any side notes. And you're going to do that by first just pasting that screencast address into. That was a perfect trade that won, right? But all it says is screencast. So I'm going to go to insert, and I'm going to turn that screencast address into a hyperlink by clicking the link button. So when I right click, I can paste that address into the address bar like I'm going to Google or eBay. And under text to display, I can say perfect 50-50 winner. And now when I come back, I know that I can study it. And how did I feel? I felt confident. Oops, I put it in the wrong spot. I felt confident because it was rules met. Maybe I put the note out here, hit targets. So I was confident on a rules met trade that hit the targets, and I'm going to come back and look at this tomorrow, and I'm going to try to replicate. I'm going to try to take that exact same recipe for success and replicate it. And this is how you use that spreadsheet. Everything that you do. Look at this, traded into a termination condition and lost. Termination condition, lost. Termination condition, lost. I'm identifying patterns in myself that are going to make me better in the future. Your second page is as you study these best of the best looks and you're looking at that picture, right? When I have a perfect trade, I want to put that perfect trade right into my trade setup look so I can come back and study it and get better at it. Repetition, right? Confidence through repetition. As I work on management, chart reading, termination conditions, I'm just going to fill all this section up. And then finally, for you guys that are brand new with it, you can go to the Nexgen client trade examples. And guys, this is where you guys were my Nexgen users, where my demos, where my students, where my old timers are posting perfect rules met trades. And you can go through and study and compare what you're doing to those as well. There's a lot on management. There's a high volume area trade. There's chart reading things. So this spreadsheet, if you remember, is part of the recipe. It's 50% of the recipe to becoming a confident trader ASAP. Everybody good with that? Termination, creating full reversals. Look at that, termination to termination to termination. 70-30, I'll take 70-30, Ziba. Because you were 0 for 100 yesterday. I like it. Of course you do. Be okay with that. Be okay with the fact that you need to practice. You're brand new. I want you to practice. I want you to feel like you need to practice because everybody should practice. Guys, I do market replay almost every day. Almost every day I replay the market and go back and try to be better than I was yesterday. It's just the path to success. All right, so let's take a look at some charts, guys. This is Gary's chart. Gary is just doing some chart reading in this one, and I love that he does this because when Gary's not taking a trade, he's taking pictures of why his rules aren't met. Termination condition, he's seeing 3 divergences. He's even incorporating another chart that suggests that this is an area that may terminate the trend, so he's not looking for trend trades into the area. Guys, this is just an educational picture. This is just a picture that says, my rules aren't met, therefore I'm not taking a trade. I'm just going to reinforce these rules. Hypoxic, good to see you. Odds favorable momentum. There's no termination conditions. And there's a pullback right to an area of support inside of favorable large triggers. Guys, give me a Y if you see it. And look what this market does, straight to its target. Over $400. Hypoxic, great trade. You had momentum. You had no termination conditions. And you take the perfect trade. And then, because of your chart reading, as this area begins to break, you take a little momentum style and grab just a little extra money on the way. High probability, medium probability. Both are winners. His ability to read his charts put him into both of those trades. He's doing it on market replay. But guys, let's look at that. That's 2 trades. That's $1,200. What's $1,200 times 5? Feels like a $6,000 week or a $24,000 month, which puts you right around $288,000 a year. Taking very simple, high probability, everything in your way trades. Of course, that's hypothetical, but this is the idea, guys. The best of the best, right? Have every advantage. Let the market tell you that you have those advantages and learn how to capitalize on them. Let me see where we're at. Next picture. And guys, I scroll back and forth, so if I miss your question for just a second, let me know. If for some reason I completely miss your question, just repost it. Gary, 50-50 trade. Small's below the large are wide. There's no divergence. You take the perfect pullback and manage the trade assertively. Gary, perfect. Great trade. The advantage of momentum on an area with the potential to break, no divergence, tiny window of opportunity, and when the conditions change with divergence, you don't hope, you exit your position, 0 loss, money in the bank. Elvis, we saw yours in the moment. Gary, let's see what you did again. 50-50, no divergence, tiny window of opportunity, and you waited for market flow. So, Gary, I know that you're gearing up to go live. Your checklist says if no divergence, enter the trade, right? And Gary, your checklist says that with divergence, look for a market flow signal. Guys, checklists are one of the most valuable tools you can have, but you got to be consistent. You have to believe them. If you don't believe them, they're just words on paper. Paul taking the absolute perfect 50-50, quick profits, and letting that next one with the potential to run to the next area. Kept your stop in place so you didn't get bumped. You already had money in the bank. And the 13-2 said hold for more. Paul, perfect. Beautiful execution. Bobby T, good 50-50, strong triggers. You have the 5-1 because you're on micro, Bobby. I can't say if it's a good trade or not, Bobby T, but what I can say is that if your rules say don't enter with divergence, then great job, right? Then great job. My charts are a completely different market, Bobby T. Micro crude is not the same market as crude. Does that make sense? Because I thought, well, it's the same market, right? But it's not. It's two totally different markets. The volume is different. The people in it are different. So, Bobby, let me show you something that when I was trading micros, I did. It does seem to follow very much. When I built my workspace, it went like this from left to right. It went CL for my 13, and then I had a large contract 5, and then I used the MCL to execute. Does that make sense? So I would look at the large chart S&P on the 13.2. I would look at the large chart S&P on the 5.1, but because I'm trading micros, I would do my entries and exits based on what I see on the large contract on the micro. I'm not telling you to do that because I don't give trading advice, but I can tell you that that's what I did, and it worked out well for me. The other thing that I noticed about micro crude is there tends to be a pretty good lag. There's a pretty good lag between micro and large on crude. In my opinion, the S&P flows a little bit better. Just something to think about as you go through. But not everybody knows that they're two different markets, and they certainly are. Safia, let's see what you did. Safia, you have strong triggers. They haven't broken through yet. And this is the S&P, right? Beautiful entry, target, and then Safia, I think the only coaching. And I'll tell you what, well, you're trading into a termination condition, right? Do you see it? Price reaches support. No trigger lines have gone through. Can I tell you two things about this trade? The first thing, if you identify the trouble spot and you know you're trading into it because you've done your study and you get it, then you can make an educated decision on whether or not you want to take that trade. Your best trade was probably right here. But you took this trade with tons of momentum. You took this trade with everything going down, and you took such a great entry and fast profits that when you get to that termination condition, Safia, for me personally, I don't trade into them, but if I were going to, I would take both targets right at 53.22 with that momentum. It just came down and retested with this freight train behind it. So I think that it's this entry. And guys, this is one of the best lessons I can give you. When your entries are amazing, management becomes easy. When your entries are right where they're supposed to be from, like you did, Safia, management gets easier and easier. True story. All right, let's see where we're at. I love looking at the live charts, guys. Lets me know where you're at. Paul, look at that entry. What's that second divergence likely to do? Guys, this is Paul reinforcing lessons that he's learned over time. Let's look at Paul's management here. First of all, he catches the best entry, just like the rest of you guys did. Takes quick profits. I love it. Beautiful 50-50. And he holds this one all the way down. He gets divergence, but the small triggers are outside. Could have held that one again, right? But he gets out. He says, I'll get out, and I'll just make money twice. If I get an entry, I'll get an entry. 2 divergences. Paul knows is more than likely to take out the previous pivot. So if I put a line at the previous pivot, look at how Paul has a mid-band inside of favorable large triggers right at that previous pivot. He takes his entry from the correct spot. He takes quick profits because he can see momentum is waning. And that third divergence suggests that the market may push higher, so he's not willing to lose money. Paul, I got to tell you, this is the one. You are absolutely crushing it today. Nice job. Coming through. And Paul, yes, we did go to the Goonies house in Astoria. My youngest son flies in on Friday. He wants to go too, so I'll be going back to Astoria. And Gary being overcautious and missed it. Can I address that? Can you be overcautious if it's a matter of rules met or not rules met? And if you are overcautious, if you skip a rules met trade, it means that you probably don't believe your rules. Maybe it's deep-seated down in the recesses of your subconscious. But if you have a 50-50 with no divergence and strong triggers, and you choose to not take the trade, and it fits your plan 100%, then you may not believe your rules, right? And that's okay, because study helps reinforce. John put a post in here. For those of you guys looking to sign up with Apex, they've got an 80% off sale, and I think you can go up to 20 accounts with that if you want. Pretty cool. Check it out. Jose, 50-50, no divergence, small window of opportunity. If your rules say that's your trade, then great job and great execution. Paul said that he took the same one because the rules were met. He didn't feel confident about it. Due to the range it was stuck in, it just didn't feel right. So one thing that we can look at on this one, and it's rules met, and let me clarify. Jose, you took a 50-50 with no divergence, strong triggers, everything, right? And Gary, you're right. It's nothing but a matter of repetition. And I'm going to talk about that in a second. Jose, and then Paul said it didn't feel right. Let's look at this one. We're a tick, maybe 2 from that key area, right? These are areas, guys. These fibs are amazing. But a tick or 2, it's almost a horseshoes and hand grenades kind of thing. They're areas. When you put together these areas, when your software opens, it's measuring every pivot in a market. It's measuring every up, every down. And it's taking them forward and backwards in synthetic time frames. And it literally looks like this. I love this picture. Guys, this is Yar's Revenge from when we were kids. But this right here is what the Fibonacci measurements look like before that amazing algorithm sorts and weighs them. And then when it sorts and weighs them, that's when you get these lines. So a tick or 2 comes close. I'm not saying this wasn't a great shot. I also sometimes like to look at this area has the potential to break, but also this area hasn't broken and has the potential to break. So I've got 2 areas. I'm a tick off at the top, and it's just kind of perfect execution, Jose. It just didn't work. And I like rules met, rules not met. And maybe there was information on an 8 range chart that helped. Maybe there was information on another time frame that helped. But for a 2 chart, 50-50, I think you nailed it perfect, 100%. And I don't think that there's a big challenge there. Elvis, I don't know if John answered your question, but it's a 30-day. You renew every 30 days. So if they get your money for the first 30 days and you don't take a trade for 30 days, they're going to have you renew. So I'm pretty sure the answer is yes. I started Apex when I was doing my traveling from Austin to Oregon, and that was about 3 or 4 weeks. And I ended up just re-upping because I think I had 2 trading days in the whole thing. Hope that helps. Elvis says the ES is in a range. Paul, let's see what you did. Paul, there's that same 50-50. I like it. Oh, and see, this is, Jose, this is the picture that I could have used that makes more sense. Elvis, yes. Apex. Whoops. All right, let me take a picture. Actually, you know what? Let's just go to the ES. You guys ready for a chart reading lesson? You must, Stephen. You have to use NinjaTrader 8 for Apex. Stephen, my Apex workspace, or for when I trade Apex, is I use Ninja 7 for everything. I have a Ninja 8 5-1 chart with no tick replay. And because Apex provides you a license, you can run both at the same time. And I literally create one workspace on a screen using Ninja 7 and 8. My execution is on 8. My chart reading comes through NinjaTrader 7. It's an easy fix, and I haven't had a crash since I've done it. Not saying that you won't, but I haven't, and I don't believe John Novak has either. So for me, it's a 100% non-issue. All right, guys, we're going to look at 2 pictures here. First, let's look at the crowd, right? 13.2. Large chart size reflect large crowd opinions of the market, right? Small chart gives us the smaller. But I like an even better picture for this one. It's Mark in his infamous shark picture. 2 types of people in the market. There's the large crowd, or as I like to say, the sharks, the big money investors, the people that create tops and bottoms, that establish momentum. Guys, these are the people that move the market. It's not us. If you think you have any control over what the market does, you're really just kind of fooling yourself. But Nexgen users, you can be a remora. You can be this guy that takes advantage of all their hard work. You can be the person that when he creates momentum, or she, could be a she, when she gives you a clear path, when they do all the hard work, then you can be the remora. You can take advantage of it. Do you need to download historical data on that intake? It's just like NinjaTrader 7, Jonathan. Open it up, get going. You can preload if you've never opened it. I did it this morning. I clear out and I'll re-download, but it's super easy. And if I'm not mistaken, right from the software user guide, everything on here goes through 7 and 8, talking about getting in, resetting simulators, building charts, downloading data, all that good stuff. And then, of course, if you need help, Jonathan, Jason in Tech is great. Or if you have specific questions after class, I'll do my best to help you, absolutely. but I don't want to go into a Ninja 8 tutorial here in the education room. Maybe in Traders Chat, you'll get some quick links that'll help you out with that. But by the end of the day, whether it's Jason or me or somebody, we can get you pretty easy on NinjaTrader 8. It takes about 38 seconds to get comfortable with it, I think. All right, so we've established that we don't control the market. So let's talk about what we see. The buyer sharks pushed all the way to a termination condition, and Nexgen users knew, don't go long. Pushed all the way down to a termination condition, Nexgen users knew, no more shorts. You guys were able to make a little money in the middle. From support, the market pushed all the way up to that exact same resistance. No more longs. Straight to support, no more shorts. Once again, Nexgen users, rules-based, make a little money in the middle. Support to resistance, resistance to support, pivot stop out, straight to resistance, and then that thing let loose. So you experienced traders, give me a word to describe what's happening on this chart. Can we say consolidation? Can we say range bound? Exactly. Don't your rules keep you from trading into those edges of an established range? Absolutely. Your rules find opportunity within. But the most important thing is that when you've identified and established a range, there's very clear borders, aren't there? Does everybody see? There's a very clear frame that market's trading within. This isn't a trade rule. This is just chart reading. When my small trigger lines barely eke outside of that range, I don't have the confidence that the other side of the coin isn't going to fight back. When my trigger lines smash through that outside of the range, when both clear it, that's when I feel the most comfortable, the most confident. This is a 50-50 trade with a much lower probability of winning. If it wins, that thing typically runs like the wind, as you see here. But it's a lower probability. Does that make sense? And Jose, I think that's a little insight on what was happening. And now it comes all the way straight down to that key area of support. Guys, it's nothing more than a fight. The buyers wanted that fib. They didn't get it. The sellers pushed back right to where the sellers wanted to go. And now we have to see what the buyers have in their pocket. Give me a why in the room if that makes sense. And sometimes you got to open up your chart and take a look. Man, this is the 1, 2, third time this area didn't clear. This is the 1, 2, third time this area didn't clear. I'm going to let it clear with no uncertainty before I look for an opportunity. Just chart reading, right? From a termination condition all the way down to support, up to resistance. Retest support, doesn't it? A little higher divergence. Does anyone have rules met based on a 13-2? Do we have odds favorable momentum? How do I know if I have a trade? Hey, Mark, is this a trade? You guys want to know the easiest way? Is this a trade? Well, let me see if it meets my rules. What direction are we going? We're trending down, which means that my small triggers should be down. Below the large triggers should be wide and angled in the direction of the trend. Guys, do I have odds favorable momentum on the 13-2? Give me a Y or an N. And if you're unsure, say, Mark, I'm not sure. Ziba, you're working on odds favorable momentum. No. I agree with you guys. So if my answer is no, done. My rules aren't met. How easy is that? Guys, if you stare at a chart, I'm going to type it out while I talk it. If you stare at a chart after the rules aren't met, your brain that is dying to be busy is going to convince you there is a trade. I do. Paul, if I get into a trade accident, maybe I click a button, maybe I'm going the wrong direction, maybe I enter a trade and go, holy crap, my rules aren't met, I hit close. And I'll take that little hickey and hope that it's not a big hickey. Guys, if your rules aren't met, then just wait, because eventually they will be, right? If you're patient, if you're waiting for the advantages, eventually the rules are going to be met. So how do I know what my rules are? All right, we're going to take a minute while these markets do what the markets do, guys. I'm going to give you a copy of this when we're done. Having a plan. What if I get into the best trade but have no targets or stops in place because you forgot your ATM strategy? Paul, that's a great question. I almost feel like it's a loaded question, but it's a great question. Guys, if I have no ATM strategy in place, accidentally, right? And I accidentally get into a sell on my chart, and I'm like, oh my gosh, I don't have a stop, and I don't have a target. So guys, if I'm short, if I have sold, what's going to take me out of that market? A buy. So I'm going to put a buy order in above. And if I'm short, that same buy will create a target. The thing you have to remember is if your target or your stop are reached, let's see if it'll get us, you have to cancel the other side. This is a good thing to practice, right? Paul, that was a great question. It was a loaded question. Thank you for that. And that's something that you guys can practice over and over. Practice it on Market Replay. Practice it on Simulator. Practice getting into the market without a stop. And then know that you can fix it in the moment. And then it'll teach you to always look to make sure that your ATM strategy is in place before you get in the market. Yeah, and Gary, that's great advice. Anytime you reapply a template, make sure that your ATM strategy is in place. All right, all my new kids. Ziba, I would almost be a little bit hurt if you weren't a little lost. You're going to feel a little lost. Your first week, and I know that you're not on demo. I think you committed, right? So the first week with Nexgen, the first week is understanding how we teach. It's understanding where the resources are. It's understanding that you will get answers if you have questions. And it's understanding that this is a community committed to your success. That's really what your first week is going to be. And you're going to pick up terminology. You're going to pick up patterns and looks in that first week. But the first week, it's like jumping into a cold pool. It takes a minute just to get acclimated. So you're going to hear the same thing 5 days in a row, and it's going to begin to click. And there's a reason that I say keep it simple. And you'll see everybody coming in behind me, people that have been where you are. It's going to take a little bit, and then it's going to be repetitions. So don't get discouraged if you feel kind of lost. Have you ever learned a new sport? When I started snowboarding in my early 20s, I kept catching edges. And for my first day, I thought there's no way I'm ever going to get this, right? Oh my gosh. That's the horses, right? You're a horse jump. Okay, you're an adrenaline junkie. I like it. But you don't jump in and you're not great, right? You have to learn the terminology. You have to build the relationship with the horse. You've got to understand what it takes to get where you want to be. Day trading's no different. It is no different at all. So your first week is acclimation, and the rest of your life is education. So embrace feeling a little bit lost and let it motivate you. But you're right where you need to be, I promise. This helps a lot. Staying focused on simple is going to help a lot. Staying focused on the best of the best will help a lot. And I always encourage new users, write out a plan, write out an example plan. It doesn't have to, this won't be your plan forever. But if you're brand new and you say to yourself, I'm going to focus on only entries for 30 days, and let that sink in. For 30 days, the only thing I'm going to focus on is learning how to get into the market. I don't care about management. I don't care about the result. I don't care about wins and losses because it's simulator. The only thing that I'm going to focus on for 30 days is getting the best of the best entry. So I'm going to personalize it. My trade is the high probability trend trade. And to enter this trade, I must have the conditions of this checklist met. Guys, I put the checklist in the room for you. I'm going to do it again so that you can print these out so you can put them on your desktop. But the checklist is pretty simple. It's exactly what we talked about. It is odds favorable momentum, the first step in learning the high probability trade, understanding odds favorable momentum. It's no termination conditions, and it's understanding that entry. And these are in order for a reason. They sure do, Jose. You don't have to know every rule on day one to be successful. But if you focus on rule number one and make sure that you're comfortable, it's going to take you to rule number two. And when you focus on rule number two and you get comfortable, then it takes you to rule number three. And that's exactly what this example of a plan does. It keeps you focused on the first three rules, taking the best of the best entry. And it keeps you taking pictures of that best of the best entry and put a couple into your trading plan. But here it is right here. There is your entire first 30 days, Ziba, in a quarter of a sheet of paper. And if this is all you focus on, if you can keep your brain looking for the best and not everything, this is the one that's going to teach you to recognize momentum instantly, to understand where the market's likely to continue, to see where it's likely to stop, right? Where it's likely to go. And then you can add in maybe one of those medium probability trades. You can add in that 50-50 trade because now you can read your indicators. And once again, it's the same thing. You're going to define what it takes to get you in. Awesome. So without software, you don't have the advantage of being able to go back and study too. And once you can go back and get hands on it, it'd be like learning to jump a horse without a horse. Theory is great, but until you saddle up, you have no idea what to expect. And I like that I know what you're into now because we can run analogies. I don't know anything about horses other than they terrify me, but I understand terminology a little bit. I had a friend that was a barrel racer. She was at least 8 cards short of a full deck. Right up there with a couple bull riders that I knew. So we're going to write this plan. We're going to focus on entries. And guys, then you're going to start, after that 30 days, then you're going to start working on management. You're going to start trying to get something out of those great entries. Does that make sense? You people that want to be busy nonstop, guys, you got to allow yourself to be a student. You got to allow yourself to wait for the best of the best. Multiple divergences at an area of support. There's a lot of momentum. But doesn't this suggest that we may get a bounce even a little bit higher? Just chart reading. Just chart reading. Looking at the S&P. The sellers finally won all the way down to support. Areas reached. Does everybody see where the trigger lines are in relationship to the reversal bar marker? Remember the gap theory? Price is likely to close the gap. So even with odds favorable momentum, a good termination condition, this lets us know that we need to be patient just for a minute. Let the areas clear, guys. Give yourself the advantage of a clear path over and over and over again. You're going to hear me say it over and over. A clear path is your best opportunity. And look at that. Close the gap right back to those large triggers, didn't it? If you tried to go long right here, you probably got stopped out and you're wondering what the heck happened. You got caught in the gap. Gary, did we look at this one yet? I don't recall. There's that same 50-50. Smalls above, large above, smalls coming through, little window of opportunity. If you're going to take this trade, Gary, that's a perfect way to take it. Was that range bound 50? Was that range bound, or was that the ES that was range bound? That was the ES. It's a rules-based trade. It's a medium probability trade. It didn't work out. And guys, here's another one of the real pitfalls of trading. Is if you skipped the 50-50 that was perfect earlier and you didn't make the money on it, and then you take the 50-50 that's perfect again and it doesn't work, it makes you rethink everything. It makes you start questioning stuff. And this is why we go through that repetition process. This is why we're filling up that spreadsheet every day with perfect pictures. This is why we're making sure that we're asking questions and we're developing 100% faith and confidence in a methodology that has been proven to win more than it loses. High probability trend trades. And then medium probability trades aren't going to have the same win percentage, right? And math people, I want you to help me out here. If I take 100 high probability trend trades, how many of those am I likely to lose? How many times are my rules going to be met 100% perfect? And I'm still going to end up losing money? 30, right? So Sam, we can prepare for that mentally. We can prepare for that financially. We have no idea which 30 you're going to lose. But what we do know is that if I keep taking the perfect setup, there's one. Gary, that one belongs to you. Here's one of Paul's. If I keep taking the perfect setup, who else is in the room that we can steal one of their pictures from? Michelle's usually creeping. Is that one of hers? If I keep taking, keep following the rules, keep getting consistent. There's another one. That's Paul. Then I know that the odds are favorable that I'm going to win more than I lose, guys. And that's why when we talk about the path to becoming a successful trader, we talk about making sure that you always take the correct trades, building that confidence, building that comfort, making sure that you don't practice the wrong trades. And the easiest way to make sure that you're on that path is to do exactly what Dave B did and post that in the room. And let's get some feedback. And Dave B posts a chart and he has a spreadsheet or a checklist. Is it coming from a good top or bottom? No. Just increases the likelihood, not mandatory. He has odds favorable. He has no termination conditions, has an area. And then Dave B, this is nothing more than an area with the potential to break but hasn't broken. Does that make sense? It has the potential to break, but it hasn't broken, which means that you're saying to yourself, you're accepting the risk. It has odds favorable, it could break, and my conditions look amazing on my 5-1. Some people will take that 8 range. Even the odds are favorable on the 8 range. And one thing that I like to do on a 50-50, Dave B, Paul, Gary, everybody else, let me zoom out just a little bit and take a picture. When I have this 50-50, and I take my entry, and I know that it has the potential to break, but it hasn't, you have the benefit of an 8-range chart, right? Some things that I really notice on an 8-range chart is there's a pivot stop out, not a deal breaker. But I get a breakout bar, and I get a high volume area to the downside on this 50-50 trade. I never got a true market flow signal, did I? I didn't get a yellow reversal bar. I didn't get an arrow underneath, and it wasn't one of those antenna bars. I just got a reversal bar. So I never got a true market flow signal either. But if I'm taking 50-50 and I get a reversal bar, I don't mind using that for my stop. This trade has the potential to go, but remember, it's a medium probability trade. I'd rather take a small loss on a medium probability trade than a full loss when I have some indication. So guys, yeah, if it was an NT8, Alex, he never saw it because he's a NinjaTrader 7. So Alex may have had an entry signal, and the same is true. What a great spot to put a stop behind, right? And on this one, if you were in at 67 and your stop's at 60, you've just saved $100 in risk. So Dave B, I think you took a good shot at it. I don't have any rules that talk about the colors of a fib. It's simply area broken, or area not broken, or area with the potential to break. One is super low probability. Does that help a little bit? One is very high probability, and one brings itself to medium probability. That's our S&P trying to put a bottom in. Has some work to do. Termination creates full reversal. Full reversal creates odds favorable. Odds favorable gives me a picture perfect pullback to an area of support inside of favorable large triggers. One divergence, small triggers still outside. Is anyone going to show me this one? Should we go through it? Let's take a picture. All right, so the first thing, I'm going to put the checklist on it because I want you guys to embrace the checklist. If you chose to skip this trade, then we have to talk about it because, guys, these are the ones that you can't miss. These are the ones that are your best chance of success. Is the market coming from a good top or bottom? Does everyone see the termination condition that creates the full reversal? That is the clinical definition of a strong bottom. Give me a Y in the room. Odds favorable momentum, right? Small's above the large are wide, they're angled in the direction of the trend. Can you see it? Can you identify it? If you can't, that's okay. Let's get you to where you can. Let's help you find the resources. All right, so here's where new users sometimes have a little challenge. Have we reached the area of resistance yet? Look at the top of that price bar. We haven't reached an area yet, have we? So we still have room to the target. So rule number 2 is true as well. Not only do I have odds favorable momentum, but I also have no termination conditions. And guys, that doesn't look like much room to get to a target, does it? In fact, that looks like virtually no room to get to a target. It's tight. But remember that rule number 3 says we're taking a pullback to an area inside of favorable large triggers. And if I look at these triggers, Absolutely, Gary. Price reaches an area. Period. Price reaches an area. That's the first part of it. Guys, from the top of my large triggers to the bottom of my large triggers, do you see it? That's the range on the triggers. That's the only area of support inside of favorable large triggers. Guys, my window of opportunity is one line wide. Do you see it? And absolutely. So Sam, here it looks tight, but remember that we buy a pullback. So once again, guys, this is a 4 yeses on the checklist. We had the advantage of momentum, the advantage of not reaching that key area yet, and the advantage of an entry at an area inside of favorable large triggers. And guys, this one went essentially from 47, and if you just got out at the fib, 57, 67, 28 ticks, $280 of potential from the entry to the Fibonacci area. If you waited for a slowdown on your 5-1 chart, when did it slow down? Never got a reversal bar until 77.97. Isn't that amazing? Rules met. High probability, nothing in the way, every indicator agrees on every chart. Guys, that's such a pretty picture. I'm going to upload it to screencast. I'm going to open up my spreadsheet. And I'm going to make sure that I can do this every time. So guys, steal that picture. I'm going to put the link into my spreadsheet. And I'm going to call this high probability trend trade long. And now I can come back and study it. Give me a Y in the room if you're with me. And let's go back. Here's smalls below the large. The large are wide. They're angled in the direction of the trend. Let's make this bigger. Absolutely, I will. There you go. All right, so let's walk through it. Smalls below the large are wide, they're angled down. Zeba, is rule number 1 met? Odds favorable momentum? And guys, not just Zeba, anybody can answer this question. Do I have a market with odds favorable? Absolutely I do. Now let's talk termination conditions. I haven't reached this area of support yet, have I? So there's no termination conditions below me. Give me a Y in the room, guys, if you recognize this. All right, but what do we have here? Large triggers haven't cleared this area of support. So what's our trigger look in reference to this 77.38 area? It has the potential to break with odds favorable momentum, but this is not a completely broken area yet, guys. This is a 50-50 look. So let's circle the tail and see if our rules for a 50-50, if your rules for a 50-50 have been met. I'm going to scroll back on the 5-1 until I see. And let's see what happened. Divergence printed, right? My rules say no divergence on a 5-1. Guys, this isn't my trade. But the reality is there's a lot of you with this much momentum, with this area just ahead, that are going to take this trade from 38 right down to the next one. For me, and my super conservative first 30-day plan, that's not me yet, but I'm going to take this picture every time so that I can understand advantages, so I can look for this best of the best trade, and look at these medium probability trades and understand when I have an advantage. Price reaches resistance. None of the trigger lines go through. And look at the bounce. Even if it doesn't stop, look at the bounce. Isn't that enough to keep you from trying to go long at this support with weak triggers into an area. Rule number 2 says let it clear. And when it clears, let's look for the rules to be met. In your S&P, support isn't giving up the fight. Resistance isn't giving up the fight. Let an area clear. Rinse and repeat over and over. Take your pictures, post your questions, go back to simulator. Take your pictures, post your questions, go back to simulator. Fill your spreadsheet like you were getting paid to do it, right? And get to where you want to be. I've got a termination condition. I don't have odds. No, Safia, there are no stupid questions. Yep, it's hard to do, isn't it? It is hard to do. So Safia, when I come back, let's do another bar by bar, okay? Let's do another one of those entries with the targets. And let's talk about what we see during the trade as it moves. And it takes a while. Which chart tells us momentum? Which chart tells us that there's nothing in the way? It's the big one, right? Nice and slow and mellow. Watch it how much this 5-1 dances compared to the 13-2. If you get in the habit of watching these ticks, you're going to drive yourself mad and you're going to get out of the perfect trade because of a tiny little push up or a tiny little push down. So guys, I'm going to take just a second. When I come back, we'll do another one of those bar by bars. We'll do it for that long trade that we saw, and we'll talk about the advantages, the disadvantages, and a great way to start thinking about things as you learn to manage your trades. I'll be back in just a couple minutes. Exactly what you're talking about. And I'm going to tell you that what you're talking about is very real for every trader. What you're talking about is exactly what happens to new people. What happens to older people, honestly. I guess I could say it happens to everybody, which is pretty cool because when you realize that you're not the only one, you know, it's like high school. When you realize you're not the only one that's insecure about the way you look, you're not the only one that thought Wham was cool when nobody else did. It's nice, and that's one of the great things about this community is it gives you an opportunity to realize that you're a little bit human, and everybody is. So guys, let's go through this together. Wham was cool. I hate to admit it, but they were. Elvis, back in the early 80s, there was a pop band. George Michael and some other guy that never got a name. About when things look like they're changing? Or about what's Wham? It was just an 80s pop band. There you go. Thank you, Ron. All right, guys, so let's go through it. I've got my 13.2. And I've got my 5.1. So rules 1 and 2 happen on the 13.2 chart. Does everybody have their checklist out? Let's look at my plan. My plan says, well, it asks me, is the market coming from a good top or bottom? Let's tighten this up just a little bit. Guys, do I have a termination condition that created a full reversal? That's my definition for a strong top or a bottom. So do I have a termination condition that creates a full reversal? Guys, the more of you that play along, the further you're going to get. Awesome. So we're just going to go back to it. All right, so I've got a yes. Now, do I have odds favorable momentum? Do I have small triggers above the large triggers? Do I have large triggers wide and angled in the direction of the trend? Absolutely. So rule number 1 is met. And I also have a termination condition. So I am batting 500 on my checklist. The next one says, oh my gosh, what's my next rule? Oh yeah, no termination conditions present on the 13.2. So let's look. Have I reached an area of resistance above me? I have not. And guys, my large triggers, both lines have made it through this other area. So does everybody feel confident saying, I have a clear path to my target. I have no termination conditions. I have not reached an area where the market is likely to stop? Absolutely, for sure. So rules 1 and 2 are met, and I want you guys to remember, every rule provides an advantage, right? Don't forget this as you start looking at trades because this is going to help you manage. So if I have strong triggers, I'm looking for a trade with a clearly defined advantage of momentum. If there are no termination conditions, guys, I have got the advantage of a clear path. I've got 2 800-pound gorillas behind me in this trade already. So now we have to figure out how to get into this market. The 5.1 is trading up. It keeps going up. And that little voice in the back of my head says, Mark, just jump in. Just jump in. Look at all that momentum. You're fine. It's going to get there. What am I waiting for so that I can identify a window of opportunity? All these up bars, my large triggers are coming up. I see some support. I see a mid-band. Does anyone remember? What am I looking for on that 5.1 to get things rolling? And remember, absolutely, Safia. Okay, Sam, we're looking for that reversal bar. And remember, guys, if you ever don't know the answer, it's okay. Go to the manual. You don't ever have to guess. We're waiting for that reversal bar. So here we go. Oh, it keeps going. Man, trading's hard. I don't have this patience. What's egads and little fishes? I guess we're not getting to trade. Oh, there it is. So now we have a reversal bar. And let's recap where we're at with this trade. We're in an uptrend because the background is green on my 13.2. We've had a termination condition that has completely reversed the market. We have a metric ton, a boatload of momentum to the upside. It's like a fully loaded freight train going downhill. And I don't have anything in the way. And I'm going to let that small group, remember that couple people that think the market should go down, get me to my best entry. So let's look. My large triggers right now are right here. I'm a couple ticks off of that mid band, right? Couple ticks off. But as the market pulls down, the large triggers start coming up. And guys, I'm not going to let 2 ticks keep me out. Sam, you're saying 46? Let's see where we're at 46. So here's 46. So one thing that I don't have here, Sam, is an area. I've got Fibonacci support down here, and I've got a mid band a tick above, right? And these large triggers are coming up like a shark. Remember, guys, these are moving averages. So those large triggers are coming up, and they are rocketing to the north side. I'm probably not going to let a tick or two difference keep me out. And why do I want to choose the top of the window? Why do I want to get in high rather than waiting for low? Well, it's because of this momentum on the 13.2. So we're going to put 2 in there. I'm going to say I'm not going to trip over a couple pennies on my quest for dollars. So we're going to have 2 entries, right? Not on the 13.2, Sam. Where does our entry come from? I like that you're looking at that. But our entries come on the 5-1, our smaller, faster chart. And they do, Sam, because what happens in one bar here is happening in all of these bars here. So we can refine that big look, and we can get those areas inside. So as the market continues down, see how those large triggers have caught up with the mid-band? Pretty cool, right? Nobody knows that on day one. This is why we do this drill. Why not 77.54? You could. You want to be 2 ticks above that mid-band? Safia? Cool. There's your entry. Well, mid-band. So, Gixam, when we talk about our areas, I love this drill because you guys ask the best questions. Notice how support's no longer in that window? The large triggers have come up and moved. I'm literally looking at a window of opportunity about this big. What about order placed between large indicators? Good morning, Ed. Rob, are you saying break my rules and don't take a trade at an area? Hold on. Let me check my concrete set of rules that provides me the best advantage ever. Area for entry inside of favorable large triggers. Now, if you have a plan that says entry inside of favorable large triggers, well, then maybe you'd be following rules. But mine says I have to utilize an area. And why do I use an area? Rob, are you from America? And I know that sounds like a weird question, but sometimes when I ask this question, I get someone from Canada that never played Little League. They played hockey. This area gives the market a place to bounce. if that makes sense. It's almost like a wall, like throwing a tennis ball up against a wall. Because of the momentum on the 13.2, I'm looking for the highest area. Most days, right on. So I'm looking at the highest point of support right at those large triggers. And guys, it's a mid-band, right? Played both. Got my first concussion playing hockey. It was a good one too. So I'm going to put a limit order, and I like that Safia said, well, Mark, I don't want to fudge over two ticks, right? Safia said, let me get a tick or two above that area of support. I'm comfortable with the risk. I'm going to make sure that I'm not going to miss this trade. That's probably my favorite entry right here. And then we still have this one down here in the middle of nowhere without an area. It was roller hockey, Joel, but they did have an ice rink with hockey. We played on rollerblades back then. All right, so Safia, you're now long, right? It came back to 54. We're going to put a stop. We'll call it 12 ticks. You're in at 54. You're below the areas inside a favorable large trigger. Safia, are you comfortable with an initial stop of 12 ticks? Or, because you have so many advantages, you want to add a couple ticks and keep it below those large triggers, below the areas? Let's do that. Below the window of opportunity, right? Oh, and it's coming for your stop, Safia. Here it comes. Uh-oh. Let's talk about where our targets are, too. If I'm in at 54, my first target is $100. I need to get to there. Let's make it green like money. And then my second target is going to be 200, right? 74, just below Fibonacci resistance. What a great target. Is everybody with me so far? We took our entry a tick or two above the area of support. Our initial stop goes below the window of opportunity, and our targets are going to be at $100 and $200. This is all 100% per the most conservative approach that I know how to give you for management and the highest probability trade that Nexgen teaches. So in order to reduce my risk, I need a reversal bar in the direction of the trade. So right now, I'm either going to win or going to lose. I have zero control, but I have the advantage of momentum. I have the advantage of no termination conditions, and I have the advantage of entering the market where it's most likely to continue. Oh, and it's coming against me. Oh, there it is. There's my first reversal bar. So what I can do is I can move my stop 2 ticks below. We didn't get this entry, right? So here we go. I'm in, and let's say that I'm 2 ticks. 1, 2 ticks. Remember that I have the advantage of momentum, I have the advantage of no termination conditions, and I have the advantage of entering the market where it's likely to continue. And I have strong triggers, right? Smalls outside. So Safia, here comes your management question. With all of this going on, what's the momentum like on my 13.2? Because the 13.2 leads the way. Guys, what's the momentum on the 13.2? It's up. Is it strong or is it weak? It's strong. And when it's strong, the market's likely to continue in the direction of the trend, right? So I'm in this trade, and it looks like it's turning against me. And this is where new users have to make a decision, and this is why we define our entry and why we define our spot. So let's go through it again. 13.2 is strong. 13.2 has no termination conditions. I know, and this one lends itself perfect. And this is how I go through it in my head. So here's a down bar, right, Safia? The momentum is strong on my big time frame. No termination conditions on my largest time frame. I still have strong triggers on my 5-1, right? The smalls are still outside of the large. And why do I point that out? I want to go to termination conditions real quick. Because I know that I have a loss of momentum. Whoops, let's go to terminations. But my trigger lines remain outside. And guys, this is a key part of my management plan. If my trigger lines remain outside, aren't my rules still met for a high probability trend trade as it comes back to this mid-band? Safia, what do you think? Strong triggers, no termination conditions, area of support triggers. Absolutely nothing has changed, has it? It's easy to say when you're not in a trade. It takes a lot of practice. With all of those advantages, am I willing to keep my initial stop where the market shouldn't go? Because I still have all three rules met perfect. And if I didn't enter here on the first pull, wouldn't I enter here? Isn't the market just giving me a second chance with all these advantages? It's a weird concept, guys, but your brain will begin to think like this. It'll go from wondering if you had a trade to instantly identifying the advantages within a trade. I would not get out, Safia. I have odds favorable momentum. I have no termination conditions. And I have an area of support inside of favorable large triggers. My checklist, 100%, says that this is still a high probability trend trade. Does that make sense? Because that's the part that you'll start working through. But this is also the part, Safia, while we focus on learning that foundation initially, being able to identify. Alex, you got out because the small triggers stayed down during the up bars, and you were very close to the small triggers inside plus divergence against. Okay. I've got one loss of momentum. And Alex, I disagree if we're comparing our two plans together, but I know exactly what you're talking about. So let's ask ourselves, are the rules met for a high probability trend trade right here? It's either rules met or rules not, right? This is where you have to start asking yourself. If the rules are met, well, then this is your trade. Stop below the window. This was the first short, or the first long. That's the second long. This is the market saying, hey, your rules are still met, just in case you missed it. Let's see what happens. It pushes down, right? And now we get another reversal bar. We've had one loss of momentum. We have the reversal bar. And this is the key for me too, Paul. My small triggers at the time of this reversal remained outside of the large. Now maybe I reduce my risk. But Safia, let's ask ourselves, odds favorable, no termination, area of support inside of favorable large triggers. This little hiccup doesn't change what's happening here. And remember, one bar, right? There's your entry bar right there. How does that look to get you to the next area? Pretty good, right? And let's look at this another way, because guys, this is something that you're going to have to practice and go back and look at. Is there anything about this 13.2 that says that market is going to reverse based on one divergence with triggers outside? I used to exit here all the time, guys. I really did. In the beginning, I would take that exit. It's divergence. Get out, Mark. I don't want to lose money. I was looking for reasons not to lose money. When what I should have been looking for is all the reasons that that market's likely to continue. And with this much momentum and nothing in the way, we'll put those stuff back in the way. Or we really don't need to. Let's not. Let's see what happens. We're in, and your first target's reached. Okay, and we're going to keep it very mechanical this time, right? But that goes right in line with what you're saying. Let's get those fibs on there. But if we're doing the very mechanical, first target reached, where's our stop now? Our stop's at break even. I've got $100 in the bank and not a thing to lose. And what am I looking for? I'm looking for $200. And here it goes. And guys, there's my second target, right at Fibonacci resistance. Right at Fibonacci resistance. And guys, congratulations. You let the indicators, you let the 13.2 tell you that this one divergence shouldn't scare you out. And this is, guys, I realize not everybody grew up in bar fights. Not everybody understands the analogy, but I want you to look at it like this. All right, and Alex, let me know if you're with me. I'm going to use up arrows for every advantage that I have. I have a termination condition that creates a full reversal. The market is trending up. I have odds favorable momentum. I have no termination conditions. I have a market that's trending up. I have larges and synthetic trending up. I have strong triggers. I have an area for entry inside of favorable large triggers. And I have one loss of momentum. I have one loss of momentum while I still have smalls outside of the large. Guys, if there were a line in the sand and you had to decide whether or not you should cross it, whether or not you had the advantage, and you had all of this behind you, and that was the only thing looking to slow you down, would you feel comfortable about the chances of you getting across that line? Would you feel comfortable about this market going up? And this is one of the reasons why I always say, let the 13.2 lead the way, right? Does that make sense, everybody? And Safia, does that help a little bit? Guys, this isn't a skill that you have on day one. This comes from an awful lot of repetition. But when you begin thinking in terms of advantages, when you begin thinking in terms of what's going right, not what's going wrong, you really start to put yourself in a position. So what we did earlier is we took this picture, right? And we called it the perfect high probability trend trade. And we put it into the spreadsheet. And then we came back after the fact. Maybe we did get out, and that's okay. Maybe you took an exit. But your job for the second half of what you're doing is to take that same picture and go back and study it. What were the advantages in place and what was the only disadvantage? And then once again, share it to screencast, right? And go to your spreadsheet and put that link into the spreadsheet. Under management, right? So now we're going to say when one divergence, or maybe under management, not scared of one divergence. And what you're doing is you're creating this plan, right? You're creating, and Safia, that's okay, because you're scared because you haven't seen it happen enough. You haven't seen this result enough with this look to believe in it enough to take the power out of that one divergence. Does that make sense? The first thing you have to believe in is that this is your best entry. And then once you believe in this entry, you start believing in everything else that goes with it. So this is a great example of how to find the perfect entry and when your indicators tell you that it's okay to stay in. I know we got a couple charts posted in here, so Alex, let's look at yours. And I think this is everything that we just spoke of, right? And the question I always ask myself, and Alex, you've even got an extra chart on here. Odds favorable, odds favorable, odds favorable, right? No termination, no termination, no termination. Everything up, everything up, everything up. Alex, you had every advantage. And this is that next step. This is step 2. The first step is, everybody heard the analogy, how do you eat an elephant? You eat an elephant one bite at a time, right? Because otherwise it's overwhelming. Your first bite is believing in the entry. Your second bite is formulating a management plan. So Alex, I think it's a great picture with an awesome entry and a lot of information to get you to that next level. Gary, anything can happen triggers. One divergence pulls back to the mid-band, odds favorable momentum on your 8 range. Once again, guys, if we're playing bar fight, and don't go get in a bar fight, please, I am not advocating that. Everything says down, there's nothing in the way. Everything says down, there's nothing in the way. Everything says down, there's nothing in the way. There is one spot where this market may continue. You can get in, you can be aggressive, manage assertively. It's a medium probability trade with an awful lot going for it. And then Paul, same one, nothing in your way, very confident. You have a target picked out, tiny window of opportunity, looking to make money all the way down. Your rules stopped you out, so you'll take the next area. Any thoughts? And then Paul, you have a different look here than we had on that last example, didn't you? Whoops. All right, so I'm going to take Paul's picture real quick, and we're going to show that next level. Guys working on management, right? Sorry, I've got a little thing to do here that makes it easy to really blow things up and take a look at it. So if I take Paul's picture, I'm going to blow this thing up nice and big. And we're going to mess with this chart a little bit. Whoops. All right, are you ready? One divergence Paul has. Because of the one divergence, Paul says he'll take a trade, right? So here's your second divergence. All right, new users, help me out on this one. Where are your trigger lines? Inside or outside? We've gone from odds favorable to anything can happen, right? And we've had 2 losses of momentum. So not only have we given up, we're losing momentum on the 13.2, and now we have 2 losses of momentum on the 5.1. We can see it through divergence. We can see it through trigger line location. So Paul said, I'm not gonna risk it. I'm giving away my advantage of momentum. I've already made money, and I'm going to get out break even, and I'll wait for the next best trade. Here, we never had to sacrifice an advantage. Here, he's given up his advantage of momentum, and rather than hoping, he makes a little money, and he lives to fight another day. Paul, this is a great picture, and I love the management. And I think that that's exactly the thought process that everybody else in this room is going to get to with some repetition. Nice job. And then John Novak, let's see what he says. John Novak says, when everything says down and nothing in the way, he'll take that entry. And then John Novak's willing to hold a position. Everybody has a different exit plan, don't they? Willing to hold on with everything saying down. It's just a little different than Paul's. But of course, he designed the fibs, and he knows that the market loves to get there. 2 divergences wasn't enough to take him out. He kept his stop in place because of the advantage that's here. And then, guys, sometimes you don't see. Other people look at different charts too. And I can tell you that there was a really good chance that John had one more chart confirming that that downward momentum had a great opportunity to get there. And then Elvis, yes, bar fights almost always end up with out-of-pocket costs in jail. Ed, let's see what you did. The S&P is grinding down. So Ed, you go short, take a quick profit, get to the right side of things and finish the move. Go short, it doesn't work out. Pulls back up to the mid-band, you go short, make profit. Ed, keeping awful busy, right? Trading with the overall trend. And just working your way through. Sam, you ask, would one should be willing to adjust their stops to say 15, 16 ticks to below the large triggers? And then Sam, once again, have rules. Mine says that my initial stop will be 12 ticks. And what that means is that when I pull the trigger to get into a trade, my automated trade strategy, let's just pull one up real quick, has my stop loss predetermined at 12 ticks. But my management plan tells me that I'm going to adjust it above or below the window of opportunity. And more often than not, Sam, you're going to be looking at about 12, whoops, I missed my 4, 12 to 14 ticks initially, right? 12 to 14 ticks initially, you're going to adjust it. But that 12 ticks initially in your ATM strategy, it gives you a second to react, to move, to get it to the correct spot. Great question. Elvis, you said I missed one. I'm sorry. Let me find it. And guys, sometimes I get rambling. Here we go. Elvis says, this question is telling and courageous. Can't wait to hear my answer. I always feel like I'm getting set up when you say that. I keep getting tricked. And in the moment, seeing it wrong, not seeing enough of all the charts combined, namely the small chart entry and entry early in various ways. And you want to fine-tune your entry. All right. So how do we fine-tune entries? Start on the large chart, right? So Elvis, I'm just going to read your indicators and let me know if I'm going along kind of the way that you were thinking, right? Paul, take care. Elvis, your 21.3 says odds favorable momentum to the downside and everything is cleared support, right? So then you come to your 13.2 chart. And your 13.2 chart is showing 2 losses of momentum coming from a termination condition. With 2 losses of momentum, Elvis, but odds favorable on the higher time frame, doesn't it stand to reason that you may get a higher push And that higher push comes right to resistance with every trigger down. And you went long. So you have odds favorable momentum to the downside, don't you? Yes. You have trend to the downside. You have a termination condition to the downside. You have triggers down, triggers down. So Elvis, everything on your chart says down, right? Am I mistaken? Let me know if I'm not seeing something. 21.3 says down. 13.2 says termination condition, but down. Your entry, 5.1, every trigger line is down. And even your 8 range, your trigger lines are down. Right? Only 2 divergences isn't a trend killer. But if all I'm doing is starting on this one, Elvis, I ask myself this question a lot. Is that my best look for long trades? I like the short trade here. Okay, so Elvis, I'm going to try to simplify. And maybe this works and maybe it doesn't, and I hope it does. I'm going to try and give you the way my brain works, and let's see if maybe something clicks. So, large chart leads the way, Elvis. That's the easiest way to put it. So, large chart represents, no, Ziba, if the background is red, we're in a downtrend. New users should only be looking for rules to be met for short trades. Elvis has been with us for a while. But Elvis, this is kind of the way I feel. Is if my large chart, if everything says up on my largest chart, if everything is screaming in the direction of a trend on my largest chart, it's rough for me to fight that, and it rarely works out. And Elvis, if we look at your picture, you said you didn't see down triggers on the small charts. At the time of your entry, every trigger on God's green earth is red. On your 8 range chart, your large triggers are down, your small triggers are inside of them. Do you see it? And Elvis, you can always tell me if I'm seeing something that you're not. So let's look at it this way. This says down. This says potential termination condition, but we still have everything pointing down. So Elvis, that little bit of patience, right? If this is really going to be a bottom, if things are really going to turn, this is my favorite look. If it's really going to be a bottom and everything is going to turn, Elvis, I want you to see something. Oops, I didn't take the big enough picture. And I recognize a lot of patterns, and this was a good one for me. Are you ready? So Elvis, this was your entry before things rolled. Look at your midband with the large triggers up. It's the exact same spot. This is your entry before the triggers rolled. Look at the pullback to the small triggers with the large triggers rolling up. It's the exact same spot. Pretty cool, right? That's what helped me a lot on the patience piece. Is if it's really going to be a top, if this blue line is going to hold, these trigger lines are going to roll. If this blue line is going to hold, they're going to roll. And sure enough, it does, right? Keeps us out of that one. You said you had a yellow bar on the entry range. This one helps you identify that you may have reached the lowest point, right? But it's that trigger rolling. It's the small getting to the other side, the large is rolling. It's just a fight. And let me see if I can find a good picture of it. I used to teach this in the 101 class. And it was a matter of identifying. And guys, we're doing a lot of chart reading here, right? That's all we're doing is learning to read our indicators, looking for an advantage. Let's see if we can find a good example on here. All right, best example I have, Elvis. I love this. This is exactly like what we used to see in the 101 class. And guys, this is some chart reading for you about why we don't have to be first. So remember we talked about the market's a fight, right? It's a fight between buyers and sellers. It's a fight between these deep pockets, and they know where these key areas are. Guys, this red Fibonacci resistance, Elvis knew about it. I knew about it. We all knew about it, right? So watch this, Elvis. Everything says up. If you get in at the red line, ooh, that's really big. If you get in at the red line, your odds of success diminish because everything says up. If you try it a second time, everything still says up. Now your smalls get below the large, but the large are still up. You try it a third time and you get stopped out. You try it a fourth time, everything's still green, you still get stopped out. You could get lucky on the fifth time. But Elvis, if you wait for the triggers to roll and look at this pullback, this fib is the same as this fib. This price is the same as this price. Guys, one of the biggest things that gets new users is our desire to be first because we're beginning to read indicators and recognizing things. So when we talk about it, and Elvis, I hope this helps a little bit. This price is this price, and let's make that big enough. And then a little bit up top right here. Let's make that font a little smaller. It's being patient and waiting for the roll that keeps you on the right side of the fight. And then exactly it. And Elvis, do you notice how this high volume area printed right at resistance? You know what that was? That was when this bar broke out. This was the line in the sand that the sellers put and said, you know what, buyers, I triple dog dare you to push back to this area. And when they did, they absolutely unloaded. Does that make sense? Elvis, I think that was the greatest picture with the best lesson you could have given to wrap up this class. Everything that we do is about advantages. But if you go back and study this, guys, the aggressive entry almost always is in the same price range as the one where you have the trigger line advantage. And the same is true. Has anyone ever taken a trend trade that didn't work out? And let's see. Maybe you take a trend trade short right here because everything said it was going down, and you get stopped out and you're like, oh my gosh. But then look, if the conditions on the 13.2 are still just as good, every trigger agrees and you get a little stab back to those small triggers to finish the move, and it's at the exact same darn price. It's all of this noise that we can stay out of. Awesome. Elvis, you are on such a good path, and it's just a matter of waiting for that little bit of a slowdown. So I hope that helped a lot. I love that picture, though. Did I share that in the room? Guys, keep this picture. Stare at it every day. How am I going to be patient? We have a few more. Ed, everything says down. You have a clear path. You take an entry, and you get there. And Ed's just saying he's using 4 charts when he does it. NG time, let's see what you did. NG time says 50-50. We're coming up on one of those key areas. Smalls are through, large are not. Divergence is printed, but he takes a perfect entry. He's able to get it low risk, and he's looking to finish the move to that Fibonacci area. I hope that one worked out for you, NG. Not a bad looking setup. And where else? Ed, we saw yours, and then NG's, and then Ed's one more time. Ed, everything says down. You get in late. Not the same momentum you typically have. Doesn't work out, but that mid band holds like a scratcher all the way down. And then it pushes back up. You take the short for continuation with the triggers that don't move. Get out at the target and check it out. Triggers roll. And then you look for an opportunity long. There's something to be said for those triggers rolling, guys. Small charts show change on the large chart. And look, there's that green line in the sand, isn't it? Termination condition, trigger rolls, line in the sand, Gary goes long. Gary, the mid band you're looking for is right here. You're looking for termination conditions on the 13-2. Nice read. And then Safia, you were asking, are you just waiting? All right, Safia, I'm going to give you the answer. Are your rules met? Let's just say rule number 1. Safia, is rule number 1 met in this picture? Nope. So what are you doing? What's your only plan of attack if you're a rules-based trader? Sitting on your hands. Isn't that? No, Safia, stop saying sorry to me. That's a great question. But if I always redirect, guys, if you say, Mark, was there a trade here? And I say, were your rules met? That's okay. Are you feeling frustrated because you're breaking rules? Are you feeling frustrated because you have to wait so long? Are you feeling like maybe you've taken a step backwards? Because you know what the reality is? Oh, and I wish I had that picture. Safia, there's a very definite path. And I want to share this with you guys. I'm going to take a picture of your picture just so that I can do this, okay? And I'm going to call out the whole thing. We're just going to black it out. We're going to make a little board here. Guys, when you start a demo, you're right here. And you don't know what you don't know, right? You don't know what you don't know. And you keep it super simple. And you're like, man, I've got this. This seems really, really easy. I can do this. And you learn to read your indicators. And you start thinking more than you follow a checklist. And it feels like you take a step backwards. And then you're like, okay, I'm going to refocus. And you do, I'm going to do the best of the best. And then you start reading and trading what you see, and you take a step backwards. And guys, this is the path for the first 30 or 60 days. And then when you commit to those rules, when you start being consistent, when you start really focusing on the rules more, that's when it kind of levels out, Safia. You're exactly where you need to be. Keep the questions coming. There's nobody in this room that hasn't felt frustrated at some point. Frustrated that they're not reading their indicators correctly. Frustrated that they're missing trades. Frustrated that they're getting out too soon. It's all part of the path. And that's why always say, allow yourself to be a student. Because if you're in kindergarten, and Safia, you're what, 3 or 4 weeks in? You're in 1st or 2nd grade. You're still thinking about recess. I know. You want to master it in 30 days. Wouldn't that be amazing if you could learn a career that pays millions a year in 30 days? Wouldn't everybody be a millionaire, Safia? Learning looks like an ES chart. So remember that, guys. Give yourself a little bit of grace, a little bit of latitude. It'll help you understand that it's okay if you don't get it 100% on day 1, day 20, day 50. All of us are on the exact same path. We're all going to get there at a different time. So don't put your time frame on someone else's standards. You do you. Ask your questions, keep posting it, and I got you. And Ed, that's true. You spend a lot of time posting, asking questions. You've got to, right? And then the light bulb clicks, and you have that aha moment. So thank you for sharing that. I mean, thank you for saying that you're frustrated. Because I think there were probably 20 people in this room that probably said, oh, thank God I'm not the only one, right? I'll raise my hand. There was a point where I almost said, to hell with this. My brother wrote the software. And I was like, I can't do this. And I typically felt frustrated when I strayed from the path. So guys, I guess there's our inspirational moment at the end. There's our inspirational moment. Elvis, you said yesterday, you said PAL speaking could, I didn't say it would. I said it had the potential to get that thing moving, and it did, didn't it? Pretty cool. I don't know anything about whether it's unique, the Fed chair, or anything like that. It typically creates a lot of movement, which creates a lot of opportunity. Okay, so Safia, anytime you're confused about something, watch this. I don't want you to ask me about all of the steps. I want you to ask me about the one step that's confusing you. Say, Mark, I'm struggling with termination conditions. And if you're struggling with termination conditions, we'll spend 10 minutes on termination conditions. And I'll remind you that, hey, there's an amazing 5-minute video on YouTube that talks about trigger line location, that gives you the opportunity to consolidate what it is you're looking at. So when you have a question, when you're confused, make it very specific. Hey, Mark, this one dumb thing right here is confusing the hell out of me. Can we spend a little time on it? And my answer will always be yes. It'll always be 100% without question. Let's get you where you need to be. And it may take 10 times for you to get it, or you could be like me and it takes 110 times. I'm a little thick-skulled. But you got this. All of you got this. Keep doing what you're doing. Stay the path. Commit to the path. Commit to the software. And guys, I'm going to be here for you until you get to where you want to be. I promise. Look at this. 50-50 trade with 3 divergences. Holy smokes. Should one trade overnight hours with Nexgen software as it is easier? Sam, one should trade when it's convenient for them. I'm in Oregon, so I wake up at usually about 4:30 in the morning. I'll look at the pre-market, but more than anything, I'm setting myself up. I love Pacific time zone because once this class is over, I'll start trading. Awesome. Joel, have a great one. They had an ice rink in Saudi Arabia. I bet that was pretty cool. Stay the path, guys. But Sam, I love the Pacific time zone because I get to trade in the afternoon. When I'm done trading, it's noon. And I can go to the gym and I can hang out and I have my whole afternoon. I can get 18 holes in after a full trading day. So just do what's good for you. Guys, you're welcome. Ziba, you're welcome. Safia, You're welcome. Thank you guys. I've got to tell you, and this is where I'm going to get mushy for just a second, and I apologize. All of these questions, all of these new users, all of this has been amazing. You guys asking these questions are making everybody a better trader. Don't stop that. Keep doing that every day, and it's going to get better and better. Guys, I'm going to go look for high probability trend trade setups. I will see you tomorrow morning at 9 a.m. Take care, everybody.